Good morning, you're watching Market Cafe with me Singh and my co-anchor Snehi Shah on ET Now, and over the next 1 hour, we'll take you through news and updates from within the country and across the globe. A very good morning to you, Snehi. Looks like it was another losing session on the Wall Street.
Well, absolutely, Shreyansi. But let's address our markets first. Absolute bloodbath on our markets yesterday. 2% down. Almost 400 points downtick coming for our markets. And let's understand why that happened. And a lot of that can be understood by looking at the action in the global market as well. And well, let me take you through what the US markets are looking like. And like Shreyansi mentioned, not much happening in the US markets. All of them have closed, like all three major indices, at least in the US markets, have closed in the red. US stock futures were little changed on Wednesday night after the Dow Jones Industrial Average notched a third straight losing day as well. Wall Street, remember, is coming off a losing session for the major averages as treasury yields rose yesterday. Yesterday, the Dow dropped almost 95 points, or that's 0.3% downtick. S&P 500 has slid 0.5%. Nasdaq has also lost almost 0.6% in yesterday's intraday session. Now, during the session, the 10-year treasury yield, that's one to watch out for because that has topped that 4.1% mark again. The yield on the 10-year treasury note was nearly up 4 bips after crossing 4.1 and after trading as high as 4.12%, which is the highest level that we've seen since the 13th of December last year. Now, investors are worried that a strong December retail sales report, which would suggest a robust consumer, could mean fewer rate cuts from the Federal Reserve than many are expecting. So, on the note of that, equity markets down, bond markets in the reverse direction doing pretty well. Currently, markets are pricing in a roughly 56% chance of a quarter percentage point cut in March. This is what polls are indicating. And on the economic front, now weekly jobless claims are on deck Thursday morning, as are housing starts and building permits data. Also, another commentary to look out for will be Atlanta Fed President Raphael Bostic, who is also set to speak today. So watch out for all of these major cues when it comes to Wall Street, Shreyansi. With that, let's also take stock of how the European markets have done. And all I'm seeing is red across my screen when it comes to European markets as well. DAX down 0.8%, FTSE down a solid 1.5% yesterday as well. CAC down 1%, and Stock 600, which is the pan-European index, was also down 1.1%. So, Shreyansi, not much optimism when it comes to the global handover. All the indices, whether you name it, US or Europe, all in the red. But with that, take us through what's happening in the world of oil.
Absolutely. Now, when you look at oil prices also, there was not much action happening. But, when you also look at spot gold, on the flip side, you did have some action happening there because gold prices fell to their lowest price since December 13. So that's what you're seeing in terms of gold. And in terms of oil, when you look at it, there was the prices were near flat as severe cold disrupted some US oil production, and that offset disappointing economic growth in China. That, of course, stoked those demand worries coming in. Now, when you look at Brent crude futures, they settled around that 41 cents rather, around that $77 a barrel mark. And when you look at US WTI, that gained about 16 cents to be around that $72 a barrel mark. Now, when you look at North Dakota, that is the top oil producing US state, and you did have below 0 degrees Fahrenheit temperatures that caused oil output there to fall by 650,000 to 700,000 barrels per day, which was more than half its typical output. Now, China's economy in the fourth quarter expanded by 5.2% year-on-year, missing analysts' expectations and calling into question forecasts that Chinese demand will fuel 2024 global oil growth. Still, you did have China's oil refinery throughput in 2023 that rose 9.3% to a record high, indicating elevated demand even if it lagged some analysts' expectations as well. So there are still signs of steady Chinese demand that have appeared. But staying with demand then, OPEC releases its first outlook for 2025, stating higher global economic growth will lead robust oil demand growth of about 1.8 million barrels per day, coupled with steady growth outlook of 2.25 million barrels per day for 2024. Now, the forecast is in line with OPEC's view on oil use that will keep rising over the next 2 decades. Now, in contrast to bodies such as the IEA, which predicts that demand will peak by 2030 as the world shifts to cleaner energy. So that's the word coming in from OPEC as well.
Well, Absolutely, and with that, let's take a stock of all the important cues that you need to be keeping on your radar for today's trading session. And when it comes to us, it's Thursday, so well, it's the weekly expiry for the markets today. Shifting focus to some global cues, not much happening globally, but the key data to watch out for will be the US, because initial jobless claims data will be coming out from there as well. Shifting focus back to our markets then, and let's talk about some corporate action, because today is a record date for Chambal Fertilizer share buyback, and also Shakti Pumps will be a counter that will be in focus, because the board will be meeting today to mull fundraising plans. And when it comes to other events, now the ECB will be publishing the account of its December MPC meeting, and India will begin to impose 50% export duty on molasses from today as well. And Wings India 2024, which is the largest aviation event in all of Asia, will kickstart today in Hyderabad. So, well, interesting events and lots of cues to watch out for in today's trading session, so keep your eye out.
Absolutely, a lot of cues to watch out for, and another cue to watch out for is what is happening at the 54th World Economic Forum. You do have a significant amount of commentary coming in from there, and the ECB President Christine Lagarde has said that the central bank is on track to achieve its 2% target, but there's still work to be done. Now, she declined to push back on market bets for 6 rate cuts this year, but said that if investors are mispricing its future moves, that could be counterproductive to the fight against inflation. Meanwhile, you did have JP Morgan Chase chief Jamie Dimon say that he remains cautious on the US economy over the next 2 years because of financial and geopolitical risks as well. Remember, Dimon has advocated caution over the past few years despite record profits at JP Morgan. Staying with the voices from the investment banking world then, Goldman Sachs CEO David Solomon also joins in on the cautionary tone and says that he expects the US economy to avert a big slowdown, but warned that inflation could still remain sticky than expected, which could in fact weigh on growth as well.
Well, absolutely, and let's keep it with Davos then, because the India story is not just about being a bright spot. That's the word coming in from Hardeep Singh Puri at the Davos summit. Talking to Times Network, he sheds light on the government strategy for India's development, energy consumption, and also the impact of the Red Sea conflict. Listen in to a slice of this conversation with Times Network managing editor Mihir Bhatt.
India is rapidly developing. We are in a few years' time going to have the world's second largest urban metro system. Urban transport I deal with as part of the Housing and Urban Affairs Ministry. So the India story all round is not just a bright spot on a global scenario which is got a few tension points, many challenges. So India is poised to become from the 5th largest to the 4th and then the 3rd largest economies. And for India, that's a very big thing. I mean, you know, after 190 years of colonial association, we came down to contributing from 25% of global GDP in 1700 to 2% or so. And now we are on the rise.
Sir, are you concerned about the geopolitical situation right now, considering what is happening in the Red Sea area?
You have to be concerned. Anyone who deals with geopolitical questions, who deals with issues relating to global trade, you are concerned, but you're not unduly concerned to the point of being worried. I'm convinced, first, to begin with, that none of the state actors involved wants an exacerbation of tensions or wants major conflagration to take place. So to use a pun, I think we will navigate around this also.
And while talking at the World Economic Forum 2024, RBI Governor Shaktikanta Das talks about India's economy and growth projections. Listen in.
I said that current year, that is for the current financial year, RBI's growth projection was 7%. The NSO, National Statistics Office, has said 7.3%. So in fact, when we said 7% for current year, there are a lot of opinion, a lot of views outside that RBI was over-projecting. But in actuality, the National Statistics Office, which has a lot more data, has said 7.3% for current year. And for next year, that is the financial year 24-25, what I mentioned is that my sense is that India's GDP growth will touch 7%.
Alright, that's the word coming in from the top boss at the RBI. Meanwhile, the big cue that the markets reacted to in overnight trading. Strong retail sales print has come in from the US, largely led by increase in motor vehicle and online purchases, keeping the economy on a solid footing heading in the new year. However, a resilient consumer could signal more momentum and possibly give the Fed Reserve some caution about how to proceed when it comes to interest rates.
And Tesla has slashed prices for its Model Y cars in Europe. The price cut comes a week after the company cut prices in China in the face of uncertain electric vehicle demand. The cuts, as well as lowered price targets from brokerages UBS and Wells Fargo, sent Tesla's shares down nearly 3%, adding to what has been a poor start for the stock in 2024.
Well, the Chinese regulator has launched a security review on a fast fashion company Shien as the company gears up for its highly anticipated IPO. China has launched a security review of the company. The review focuses on the company's supply chain presence in the country and how it handles information about its employees, partners, and suppliers in the region.
And with this, we're timed out on this segment, but we'll see you with more news and updates on the other side.
Hi there, welcome back. You're still watching Market Cafe. Thanks so much for staying tuned to ET Now. Let's take stock of how the Asian markets have opened up this morning. And well, they're rather mixed this morning after stocks fell in the previous session, with mainland Chinese shares touching a near 5-year low. We'll touch up on that later as well. And investors will be watching Australia's unemployment numbers today on clues of the Reserve Bank of Australia's moves in its February meeting. Australian markets extended their losses to a fifth straight day. ASX 200 fell 0.7% on open right there as we speak as well, down 0.7%. This is ahead of its unemployment data that will be releasing today. Shifting focus, let's talk about Nikkei then, and that's Japan's index. Now, Japan has rebounded up 0.3%. It's right there as we speak as well. This is continues to build on those momentum when it opened, and Japan in the green, a positive indication coming in from Japan's markets at least today. Shifting focus then, let's talk about South Korea's Kospi. That also gained almost 0.2%, continues to build those gains, 0.5% uptick coming in for Kospi as well. And let's talk about the big loser yesterday, and that has to be the Hong Kong stocks that plunged almost 4% to hit the lowest level since November of 2022 yesterday. However, Hang Seng has nominally slipped into the green today, not doing much, rather flat, but 8 points in the green nonetheless. And let's also see what Shanghai is doing. Shanghai, however, in the red, 1% downtick still continuing for Shanghai as we speak. And well, let's talk about what happened in our markets yesterday. Absolute carnage. We managed to close at the 21,570 whereabouts, down 2% on an intraday basis yesterday. Implied open at 21,407. A gap down start being implied for us this morning, 0.8% lower, or rather 180 points lower is what the futures are indicating for us this morning, Shien. So well, let's see how that pans out for us and if we continue to build on those losses that we did see yesterday.
Absolutely. And moving focus away from that then, as we're continuously bringing you exclusive coverage of World Economic Forum 2024 from Davos, multiple MOUs are being signed between key stakeholders of the world. In an exclusive chat with our national editor, Times Network, Anuya Yadav, MA Yusuf Ali, Managing Director, Lulu Hypermarket, shares his expansion plans for India. Let's take a look at the story.
And we have with us Mr. Yusuf Ali. Sir, you just had a meeting with Ms. Gunjan Krishna, Industries Commissioner, Government of Karnataka. How was it?
Yes. I had a very fruitful, lengthy meeting with the Honorable Minister and Secretaries. They are very positive. And now in the food processing, we are going to start in Bijapur. Food park, they are going to start in Bijapur. And also in the other areas like retail, shopping malls, we are looking the possibilities and places wherever it is available, and also hospitality, hotels, also we are looking. So let us see. Karnataka state is near to my home state, Kerala.
And sir, how do you envision the role of Lulu Group in basically shaping the global retail trends?
See, We are one of the largest retailers in the Gulf, Egypt, and Indonesia and Malaysia. Now we are expanding our footprint in India. Now we have got 5 shopping malls and also about 7 retail outlets, that hypermarkets. We are expanding to all the states, and we are going to construct India's biggest shopping mall in Ahmedabad, Gujarat, where I brought up and I educated. And also we constructed 2 big shopping malls in my home state, Kerala, and 1 in Karnataka, and 1 more we are going to finalize in Karnataka.
Congratulations, sir, and have a good day. Thank you so much for speaking to us.
All right, that's the big voices coming in from Davos.
Welcome back. Thank you so much for staying tuned in. Let's take a look at Grasim then. And after the company announced a rights issue on January 4th, it opened on Wednesday and will close on the 29th. The entitlement settled at 351 rupees. So what should investors do with the rights entitlement? Somit has the answer.
Well, if you see, the Grasim rights entitlement has now started to trade on the exchanges, and yesterday's closing price for rights entitlement was 351 rupees. So here we give you an idea of what can an investor do with this rights entitlement. Now, if there's an old investor who has got this rights entitlement in its portfolio, then if they sell the rights entitlement, then what they get is the rights entitlement value, that is 351 rupees, and this 351 translates to a dividend per share of around 11.7 rupees per share, which is now the highest dividend that Grasim has announced at least from 2017. Now, if they go on to keep this rights entitlement, then it will be too much of a hassle because they need to track the payments date for this rights entitlement over a period of time, and if they fail to pay this amount, then the same could get forfeited also. Even Citibank, who's a large investor in this rights in Grasim, sold 1/3 of the rights entitlement so far in the market. Now, if someone bought this rights entitlement for arbitrage, and the gains that they would have got would be maximum 1.1%, because the buying price of the Grasim at before the record date was around 2,058 rupees. Current market price is 2,068. Rights entitlement value is 351. So the maximum gain in percentage terms for any investor would be just 1.1%. Now, what should new investors do? Now, if one is interested in Grasim or is interested in Grasim play over a long period of time, they can consider buying rights entitlement of Grasim and play the Grasim trade over a longer period of time. Now, if you see, the current holding cost of rights entitlement would be 351, which is the price at which RE is trading, plus the 453 amount, which is the application amount which they will have to pay going forward. So the total holding cost at this moment would be 804 rupees, while the remaining 1,359 is something that an investor will need to pay over a period of 3 installments over a period of 3 years. Now, we still do not know what is the exact timeline of this, but we are assuming that this will be paid over equally over the next 3-year time period. Now, if you see, the total holding cost of this RE would be just 4.6% higher compared to what Grasim's current market price is. So any investor who wants to play Grasim could actually buy and hold the rights entitlement, because it would be beneficial for them if the calls are equally spread over the next 3 years. Now, this is because if you see, the price is just 4.6% higher. That is, the total holding cost of this RE is just 4.6% higher compared to the current market price, while the SBI fixed deposit rate for 180 to 210 days is at around 5.75%, while the HDFC Bank sweeping deposit is also at around 5.75%. So one could be better off by holding this RE rather than buying Grasim shares from the market currently.
All right, Swami, thanks so much for taking us through that and what to do with the Grasim rights. But let's move on and talk about some earnings, because ICICI Prudential came out with a very disappointing set of Q3 numbers. The life insurance value of new business and margins were also sharply below estimates. So what else went wrong and why such dismal numbers in Q3? Swami, help us understand, please.
Well, if you see, the third quarter numbers of ICICI Pru were a howler. Now, the VNB number was expected at around 510 to 540 crore rupees, but the company reported a VNB of just 436 crore rupees in the market. Now, apart from that, if you see, the VNB margins have also come in at close to 22.9% versus the street estimates of around 27 to 29%. Now, what led to this? Now, as per understanding, this is led to because of higher cost ratios and because of the shift in product mix, which is increased a share of par and linked portfolio and a decline that we have seen in group term insurance. Now, structurally, what analysts are believing that the margins have been declining and remains a key monitorable for ICICI Prudential Life going forward. Apart from that, the persistence ratio of across all metrics have improved for the company. The Q3 bank insurance channel grew just 2.2%, but that is most likely because ICICI Bank channel continues to decline, and the growth in agency also was kind of tepid in the third quarter of FY24. Apart from that, if you see the company's valuation, they are trading above the 5-year average at around 59 times. That is a 12-month forward, and there could be a downside risk now to the VNB forecast, subject to what management gives an explanation on today's conference call, which is at 8:30 p.m. Because that's how analysts will start and extrapolate the numbers for FY25. So keep an eye out for ICICI Pru in trade. The conference call is 8:30 p.m. today, 8:30 a.m. today.
Absolutely. Thank you so much, Somin. So we'll definitely be keeping an eye on that counter. But moving away from that then, 1 month grace period for talks and completion of Zee-Sony merger are ending this weekend. But ET now learns from sources that no common ground has been reached so far. Ankur Mishra has more details. Ankur?
Yes, sources say that both parties, meaning Zee Entertainment as well as Sony, is continuing talks ahead of 1 month grace period for merger extension expires on January 20. Now remember, last month on 21st of December, the timeline for completion of merger had ended and both the parties had agreed to extend whether or not to extend the timeline of the merger, and for that 1 month grace period was there as per the merger completion agreement. Now what we have been told, there has been dialogues which were held between both the parties, and in one of the meetings Puneet Goenka had also offered to not to be CEO of the merged entity. However, he was not in agreement of NP Singh, meaning Sony India had to be the CEO of the merged entity. Therefore, no common ground has been reached between both the parties. What Zee Entertainment had suggested for its new search panel, which will find a new CEO. And however, on the other hand, Sony has been pushing for its India head NP Singh as the CEO of the merged entity. Now we need to wait and see before the deadline of January 20, and till that time we understand that Sony will take a call whether or not to go ahead with the extension of merger.
All right, Ankur, thanks so much for all of those details. But with that, let's slip into a very short break. We'll be right back on the other side. Hi there, welcome back and thanks so much for staying tuned to Market Cafe. Let's talk about some quarter 3 numbers. And LTI Mindtree was another company that came out with its quarter 3 numbers yesterday. It has recorded its highest ever order inflow at $1.5 billion in quarter 3 of FY24. But overall, the numbers are just muted for the IT major. A slight miss on the numbers coming in on an overall basis. Revenue has jumped 1.2% sequentially. And looking at segment-wise performance then, BFSI continues to be weak for the company, and so was the high-tech business. Manufacturing vertical, on the other hand, has done better this time around compared to the previous quarter. And some cautious commentary has also come in from the management too. So let's listen in to what they had to say.
BFSI is our largest vertical, and it's a global vertical. I mean, it's one vertical where we have presence across the globe. What we are seeing is that the pressures on BFS spending or BFSI spending continue. So we are seeing that environment will continue for the near term. Having said that, the deal pipeline in BFS is strong. We have some new wins as well this quarter. So we will build on that for the future. But our strengths in this vertical are fundamentally strong, so we will continue to build on that. In terms of, you talked about geographies. Actually, there's the Europe the growth or the softness in growth in Europe has also come because of BFSI. Because Europe, our portfolio in Europe is heavily weighted towards BFSI. But again, having said that, some of the deals that DC spoke about in his opening remarks are also from Europe. So I think the deal momentum is strong. As we see opportunities arise and we see the environment getting better, we'll start to see a return to higher growth numbers in the future.
In this environment of restrained client spending, we continue to expand our value proposition to become a partner of choice for our clients. Despite experiencing higher than anticipated seasonality in Q3, our strong order inflow and healthy deal pipeline set the stage for our medium-term growth. While our margin optimization program continues, we remain committed to investing appropriately to capture growth opportunities, because of which our aspiration of a 17 to 18% exit margin will get pushed by a few quarters.
Right. So that's the word coming in from the management about the BFSI segment as well as margins. But let's also take a look at what the brokerages had to say about this. Now, when you look at Kotak Securities, they're maintaining their reduced stance, and you have downgrades coming in from InCred, CLSA as well as Investec. Now, when you look at what Kotak Securities had to say, they're maintaining a reduce. They're cutting the target from 5,500 to 5,910. And they're also seeing this as a muted quarter. Somber near-term outlook is something that they're highlighting as well. And they're also saying that sharp furlough impact on EBIT margin is something that they're also seeing play out for this particular company. Now, they're also seeing that merger synergies are not visible when you look at LTIMindtree. And they're seeing the company trade at expensive valuations. Now, when you look at the word coming in from InCred as well, they're seeing a downgrade to reduce from hold, and they're hiking the target on the flip side from 5,657 to 5,264. Now, they're seeing the Q3 earnings as a miss on all fronts. So that's the word coming in from InCred. And they're also seeing weak Q4 revenue guidance, and that driving a cut in estimates. In fact, they're on the flip side about the deal win pipeline. They're seeing that particular pipeline as good. And they're, however, seeing client issues impacting execution as well. So that really is the word coming in from InCred about LTIMindtree. When you look at CLSA as well, they're seeing this as a miss this particular quarter. And their consensus is that estimates are baking in strong revenue as well as margins. That's the word coming in from CLSA as well.
All right, well, lots of brokerage views coming in on LTIMindtree, but let's shift focus from that stock and let's talk about another stock that will be in focus today, and that's NHPC, because the government is looking to divest up to 3.5% stake in NHPC via offer for sale and is likely to raise around 2,300 crore rupees. But what are the other PSUs where the government has divested its stake, and which stocks have had the most run up out of these in 2023? Sharad is joining in with all of those details. Sharad, good morning. Take it away.
Well, the entire OFS actually is coming up for NHPC. Roughly 3.5% stake sale would be there in the offering. The fundraise is more than 2,200 crore rupees. And interestingly, the floor price, if you look at it, that is coming in at 66 rupees per share, which is currently at 10% discount to the current market prices. Now, over the previous year, OFS also, they have actually started coming up in FY23. If you look at it, the number was 4. And now, for FY24 also, if you look at it, the important OFS is coming in when it comes to Coal India, HAL, HUDCO, IREDA, RVNL, SGVN, and even IRCON. So roughly you could see a total mopping happening of more than 10,000 odd crore rupees, that is what we have seen in FY24. Also, if you look at the PSUs which having the highest government holding, and of course the usual names come in such as KICL, Punjab Sindh, LIC, Indian Overseas Bank and UCO Bank, which have more than 95% stake actually in the company, and you can see that their 12-month gains have ranged between 32 to 74 odd percent. Another interesting update is that the PSUs which have already run up in 2023 and also the spillover effect coming in 2024, we are having stocks such as REC, PFC, IRFC, NLC and even ITI coming in the pack, and they have given returns of almost more than 200% to the returns at an average level.
Well, thanks, Sharad, for that update. But let's switch focus back to earnings then. Asian Paints reported a mixed set of Q3 numbers. Let me also go across to Lisa to find out what are the key takeaways from the con call and what are the brokerages saying on this particular counter.
Right, so after delivering a largely inline set of numbers, the con call was held post-market hours, and here are the key takeaways of the con call. They expect the double-digit volume growth to sustain the volumes going forward. And talking about the raw material prices, some softening was seen, and that is expected to continue in Q4 as well. Now, on the guidance, they said that the EBITDA margin that will be in the range of 18 to 20%, and this is despite the higher ad spends that will be taken. Rural markets saw some green shoots and some recovery in rural markets. And but talking about election, they said that a bit of lethargy and deferment will be seen in Q4 and Q1 of FY25. Now, the home decor segment, which contributes around 4%, that is expected to contribute around 8 to 10% to the overall revenue by FY26. Capex is progressing well, and the backward integration of VAM as well as VE plan that is expected to commence by end of FY25. And lastly, on the pricing, they said that the decision will be taken based on the Q4 FY24 trends that will be seen. So here are the key takeaways that were seen for Asian Paints, and it will be in focus today on the back of this.
All right, Lisa, thanks so much for taking us through that. We'll see how the numbers have impacted the stock of Asian Paints today, so we'll watch out for that. But with that, it's curtains down on this edition of Market Cafe. From me, Singh, my co-anchor Shien, Singh, and the entire team that put this show together. Thanks so much for watching. You don't go anywhere. The market takes all the action ahead. Implied open, not indicating a very good start for us, but let's see how that pans out.